Hey everyone, welcome back to Corporate Dakota, the place where we peel back the layers of corporate jargon to find the juicy bits. What if I told you that sometimes companies issue shares to their own directors just days before Christmas, or maybe a bit later like mid-January, and then report it after the fact? Sounds like a holiday bonus to me, but let's see what the SEC filing says. Today we are diving into EQT Exeter Real Estate Income Trust Incorporated's latest filing, an 8K report. Now, 8K reports are like special announcements from companies filed when something pretty significant happens that investors should know about right away. Think of it as the company's way of saying, hey, heads up, something new is going on. The main story in this filing is pretty straightforward and talks about the company issuing new shares. It's all about how they sold more stock, but not on the big public stock market. They sold it in what they call private placements, which means they weren't offering it to just anyone. It was to specific people like their own directors and what they call accredited investors. So, on the 12th of January of 2026, EQT Exeter Real Estate Income Trust Incorporated, or as we'll call them the company, sold some shares of their Class E common stock. They issued over 220 shares to two of their own independent directors. Now, these directors aren't employees. They are people who, in theory, oversee the company from the outside to make sure things are run properly. They bought these shares at $11.47 each, adding up to about $2,530. This was done through their distribution reinvestment plan, which essentially means they used money they were supposed to receive back as a sort of reinvestment into the company by buying more stock. Then on the very same day, the 12th of January, they also sold other types of stock. Class A, I, and Class A. I common stock, they sold over 10,000 shares of Class A I stock at $10.7 each, which brought in about $110,000. On top of that, they sold nearly 9,000 shares of Class A I stock at $10.67 each, raising about $94,730. These shares were also sold under their distribution reinvestment plan, and this time it was to what they call accredited investors. But the selling didn't stop there. A little later, on the 2nd of February of 2026, they sold a much larger chunk of Class A. I shares, they issued over 200,000 shares at $10.7 each, and this time they raised a much more significant amount, about $2.18 million. Again, these were sold to accredited investors in a private placement. The reason they can do these private placements without registering them with the SEC is because they are claiming exemptions under the law. Specifically, they are using Section 4, Art 2 of the Securities Act and Rule 506C of Regulation D. In simple terms, this means they are selling to sophisticated investors who are assumed to understand the risks involved and do not require the same level of disclosure as the general public. Think of it as a deal between people who know what they're doing and don't need the company to hold their hand too much. And who signed off on this? J. Peter Lloyd, who is the Chief Financial Officer and also a director of the company. He confirmed all of this on the 6th of February 2026. So, what is the story here? EQT Exeter Real Estate Income Trust Incorporated is actively raising capital by selling new shares. This is common for real estate investment trusts or REITs, which often need funds to acquire new properties or develop existing ones. The fact that they are selling to their own directors and accredited investors suggests they are confident in the value of their shares and want to bring in capital from those who are either closely involved or financially savvy. The prices for these shares, around $10.67 to $11.47, can be seen as the company's current valuation per S-Hair in these private transactions. Now, looking at this from a broader perspective, it tells us the company is expanding or at least looking to maintain its growth. When a company issues new shares, it can dilute the ownership percentage of existing shareholders if they don't buy into the new offering. However, it also provides the company with the funds needed to grow, which can ultimately benefit all shareholders in the long run if those investments are successful. The use of a dealer manager, EQT Partners BD LLC, an affiliate of the company's external advisor, is also typical for such offerings. It is interesting that the filing mentions no fees are payable to the dealer manager other than customary reimbursement of expenses and indemnification. This could indicate a desire to minimize costs associated with capital raising, or perhaps that the affiliate is compensated in other ways. From a Warren Buffett-style perspective, we're not seeing massive profits or losses reported here, as this is an 8K focused on share issuance, not a full financial report like a 10Q or 10. However, the underlying business is likely making decisions that involve capital allocation. The price per S-Hair at which these securities are sold can give us a snapshot of how the company values itself in private transactions. A consistent price range, like we see here, suggests a stable internal valuation. The The key question for an investor would be whether the company's strategy for using this newly raised capital will lead to future growth and profitability that outweighs the dilution from issuing more shares. The risk here is always that the new investments don't pan out, leaving the company with more shares outstanding but not significantly more value. In conclusion, EQT Exeter Real Estate Income Trust Incorporated is actively fueling its operations through the issuance of new stock in private placements to both insiders and accredited investors. This is a sign of a company that is looking to grow and is confident in its investment prospects. We'll be keeping an eye on how these funds are deployed and what future returns they generate for shareholders. Alright, that is our breakdown of EQT Exeter Real Estate Income Trust Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.